Hi, I'm Michael Yardney, and boy was 2015 an interesting year in property, starting with a bang and finishing with a bit of a whimper. I think 2015 is going to go down in history as the year the property boom in Sydney and Melbourne came to an end. Now, don't get me wrong, our market's not going to crash, and there will still be some selective good price growth, but the rate of growth that we've recently experienced in Sydney and Melbourne, it was unsustainable considering our low inflation rate, our low interest rates, the low wages growth, and the fact that the boom lasted for about 3 years. It had to come to an end. And the other big thing is that our markets are fragmented. I don't ever remember seeing our property markets as fragmented as this. While the pace of growth has slowed over the last few months, individual performances remain patchy and mixed both between our capital city markets and market segments within them, reflecting the underlying impact of local supply and demand, and in particular local economic and job growth. We'll also remember 2015 as the year that APRA stepped in and slowed down much of the investor frenzy, introducing guidelines to our major lenders that would result in the stemming of the growth of residential loans. Now, despite various arguments about the effectivenesses of these measures, the new guidelines certainly seem to have played their part, with many borrowers having to adjust their expectations when seeking a loan. Over the last 6 months or so, what's happened is investor lending has decreased considerably at the same time as owner-occupier lending increasing a bit. But with the rising house prices and minimal rental growth, 2015 is also going to become the year of falling rental yields. We've had the lowest annual growth of rents on record. In most capital cities, rents only grew by 0.3% over the 12 months. The only cities recording an increase of at least 2% in rental rate rises were Sydney and Melbourne. So why did the Sydney and Melbourne market perform so well? It's really been a two-horse race in property this year. Sydney was, of course, the standout performer in 2015 with a growth rate of 12.8%, and Melbourne was the best performer in the last 3 months and over the year grew at 11.8%. And the focus has been on these two capital cities because there's strong economic growth, strong jobs growth, massive population growth. In fact, 60% of our immigrants are coming to those cities to chase the jobs. At the same time, the outflow of residents from Sydney and Melbourne to other states, particularly Queensland and Western Australia, has slowed dramatically since the end of the mining boom. Of course, it would also help that property investors chasing capital growth have been targeting these cities. But now there are some signs that our markets are cooling. 2016 will usher in a very different property climate. We finished 2015 with lower auction clearance rates, agents encouraging vendors to accept offers before auction, a fall of buyer confidence. And 2016 is likely to start with a lot of negative media sentiment. We're going to hear headlines like the property market's going to crash, house prices are unaffordable, the world's economy is stalling, the Chinese money is going to stop coming to Australia, our property markets are going to crash because that, interest rates are rising, no, they're falling, Australia's going to have a recession. You know what they say, Kim Kardashian's going to do that again. The media is likely to put a negative spin on the cool changes that have swept across our property markets, while others are going to see this as an opportunity. However you see it, 2015 was a very interesting year in property, and all the signs point to 2016 being an even more interesting year. If you'd like to get some help to make the most of the opportunities of 2016 and avoid the mines that are ahead, why not have a chat with the team at Metropole? We have no properties for sale and we're independent and unbiased, but we can give you the right advice to select those segments of the Australian property market that are still going to offer good opportunities. Why not give us a call and have a chat with our team?